Good morning to all the participants. It's a very important program. It is a very important and knowledgeable session on direct taxes. It is a tax planning and incentives to MSMEsin under Income Tax Act. It is this topic is chosen by the speaker because to enlighten our practicing people for expose into the practical aspects. And I am having privilege to introduce him to you as a CA Subbarao Kesavarapu Garu. He is a FCA and CMA managing partner of the firm and has more than 13 years of post-qualification experience in the fields of structuring the businesses, accounting, tax planning, auditing, management consultant, and valuation of the companies. He is very passionate in learning and updates his skills time to time. His academic achievements include he is a top he is a 42nd rank holder in CMA and a registered valuer with Insolvency and Bankruptcy Board of India, IBBI. Started the firm in the year 2015 as a sole proprietor. Now they are team of 3 partners and 10 members happily serving over 25 plus corporate clients and 100 plus MSMEs, 100 plus GST clients, and completed 100 plus valuation for companies who are looking for funding. So now with this, we'll start the session. Sir, now the session is handed over to you to continue, sir. Thank you.
Yes, sir. Thank you, Prakash Garu, for giving this opportunity to share my knowledge to all the participants. So myself, CA Subbarao Kesavarapu, and I know so it is very difficult for everyone to wake up in the Sunday morning and attend for this session. And I would really appreciate all the participants taking their time, wake up in the early morning of Sunday and attending this session. So I hope I am clear, right? My voice is clear.
Yes, sir. Yes, sir. Yes, sir. Not a problem.
Yeah.
Good.
Clear, sir.
Yeah.
Audible, sir.
Sir, actually,
Yes, sir.
all the mics are on mute, sir. So don't expect them to open the mics, but they're all actually our students, part of it, are very cautious and they've been paying the attention, sir. Thank you.
Yes, sir. If anybody is facing the problem, just text in the chat box so that we'll adjust accordingly. Okay. And also now let's start to the topic today. So this is about tax planning. Okay. So what is tax planning? So if you go by the definition of tax planning, what is tax planning? It is just to save the taxes to the assessee or the client, but in conformity with all the legal requirements as per the law. There is a huge difference between tax evasion and tax planning. Though both are to save taxes, the tax planning refers to tax saving as per the Income Tax Act and as per the legal requirements. And tax evasion is by adapting for the unfair methods, right? Now, I hope you all know about Income Tax Act. Now I will cover how we do the tax planning from practical aspects, okay? Just a second.
Do you want me to go for the next slide?
Yes, sir. Yes. You can go to the next slide.
Yes,
Yeah.
sir,
So
okay.
The next slide is tax planning. So I will take one example and I will tell you how we do the tax planning for any client. Say, take the example of old tax regime and new tax regime, right? Hope everybody know what is old tax regime and new tax regime. I'll tell you a brief about it. So first you before you know about what is new tax regime, what is existing tax regime, you have to know, right? What is existing tax regime? These are all the tax slabs which are applicable to individuals. What is in the old tax regime? The tax slabs are like this: 0 to 2.5 lakhs, there is no tax. 2.5 to 5 lakhs, it is 5% tax. 5 lakhs to 10 lakhs, it is 20% tax. Above tax. Okay, this is the existing slab rates. From the last 3 finance budgets, our finance minister Nirmala Sitharaman has introduced new tax regime. So what is new tax regime? In the new tax regime, there will be, like, you know about deductions and investments in the Income Tax Act. Say, for example, if you are paying any insurance for your life, that you can claim as a deduction. And also, if you have taken any health insurance policy, you will pay that health insurance premium, right? That you can claim as a deduction. And also, if you have any housing loan, and if you are paying any interest on housing loan, that you can claim as a deduction. But all these deductions, you can't claim under new tax regime. And in the new tax regime also, there are 2 rates. Up to 31st March 2023, there is one tax rate. From 1st April 2023, there is another tax rate, and that you can see in the presentation. And I will ask you one question. Everybody know what is financial year and assessment year, right? So, for example, I will ask you one question. Maybe you can type in the chart. For financial year 2023-24, what is the assessment year?
24, 25. 25.
Yeah.
All of you
correct.
mention it in the chat box, please. Don't open the mics. Please mention in the chat box. All of you mention it in the chat box.
Very good, very good. So everybody know what is financial year and assessment year, right? Yeah, see, that new tax regime, the rates are given 31st March 2023, right? These are all the rates which are applicable for 23-24 assessment year, right? And the next tax rates are applicable for the next year. That means 24-25. So you know about our finance budget, right? So what is the date for finance budget every year? Can you type in the chat box? Finance budget date. That is a fixed date for every year. Yeah, 1st of February. How many of you are following? Maybe you can raise the hands. Have anybody seen the finance budget when Nirmala Sitharaman is presenting in the session? Yeah, it is very important actually, because we are into commerce industry, so we have to understand how the budget is going on, what is GDP and all that. Very important actually. So that finance budget where Nirmala Sitharaman is presenting on 1st February, that is applicable for the next year. That means from 1st April it is applicable. So that we can plan taxes in advance, they will present on 1st February. So that we'll have time for 2 months. Okay. So if you have any doubts, maybe you can type in the chat box. So I will try to answer that during the session or at the end of the session. Okay. Now hope you are clear on what is old tax regime and new tax regime. Now the question will be, so what is beneficial for the client, whether to opt for the old tax regime or go with the new tax regime? How will you know? Sir, can you go to next slide? Okay, so Anirudh. Yeah, can you go to the previous slide, sir? Yeah. So Vaibhav, right? Nirmala Sitharaman has told for income tax below 7 lakhs, there is no tax. Yeah, correct. That is for the next year. Okay. And there are some conditions attached to it. So if your income is up to 7 lakhs, then there is no tax. That means they will give rebate on that. But if the income is above 7 lakhs, the existing tax slab rates are applicable. So in income tax, right, like everything subject to some conditions and the accept and all that, right? So like that it will be there. Okay. So we can go to next slide, sir. Okay, so this is how we'll plan the tax structure for individuals who are confused between old tax regime and new tax regime. Okay, so I'll explain this table. So on the horizontal line, we have given the deductions. Deductions means whatever savings we have, like your LIC premium, health insurance premium, housing loan interest, all those deductions put together we have given on the first row. Okay, and on the first column we have given the gross total income. I'll take example of, say for example, if you have a gross total income of 9 lakhs, okay, and if you have a deductions of 1,62,500, then new tax regime is beneficial for the SSC. But if the SSC has in deductions more than 2.5 lakhs, then old tax regime is better. So this is how we structure the tax planning for the client. For every client, we calculate what is beneficial. Accordingly, we'll opt for it. Okay. Maybe I can ask you one question. So if any person is having 10 lakhs income, and if the deductions he has is more than 3 lakhs, what is beneficial from the table? Can anybody type in the chart? 10 lakhs gross total income, and if he has more than 3 lakhs deductions, which regime is better? Old or new, or both are same?
Please check the table and answer it. Please mention it in the chat box. All of you have to have an interaction, please. Please be fast.
Yeah, 10 lakhs income and the deductions are more than 3 lakhs. Which regime is better?
No.
Yes, correct. So in the first column 10 lakhs row you can see, and in the first row, if it is more than 3 lakhs, you can see the table, right? Yeah, correct. So old tax regime is better. So put it in a simple words, the more deductions you have, old regime is better. The less deductions you have, new tax regime is better. So for any person who has started his career savings, right, then he can opt for the new tax regime. I didn't understand the question, sir. Why old tax is better? Okay. In the new tax regime, there are no deductions available. I already told you. So, but if you have the deductions, you can claim under old tax regime.
Yes, sir. Yes. Yeah.
Okay, got it?
Yeah.
So that is the reason we'll calculate like that. If the person doesn't have any deductions, then new tax regime is better. But if the person has more deductions. Deductions already told you what are deductions, right? I will tell you in detail about deductions also in the next slide. Then old tax regime is better. Yeah, hope I am clear on this old tax regime and new tax regime till now. Okay, and then we'll go to next slide, deductions. So what are the deductions available for any person? I'll tell you maybe briefly about all these deductions. Okay, so 80C. So this is a very popular section. In this, you can claim all your deductions. Like if you are paying any insurance premium for your life, and if you have any kids, and if you are paying any tuition fee for the kids, you can claim under this section. And if you have any provident fund, you can claim under this section. And also if you have any housing loan, if you are paying the principal repayment will come under this section. Okay, so all these put together, there's a cap of 1,50,000. Up to 1,50,000 you can claim under 80C section. Okay, next is 80CCD. That is actually NPS. So National Pension Scheme. This is a recent section they have introduced. So over and above 1,50,000, if you want to claim more deductions, you can opt for this 50,000. And 80D is medical insurance premium. So if you are paying any insurance premium for your health or also for your parents, you can claim under this section. And also there are 80DD and DDB. If at all anybody is suffering with any existing diseases, specific diseases they have given in the Income Tax Act for yourself or your senior citizens, dependents, you can claim under that section. This is another section 80E, interest on educational loan. So if you are studying any higher courses and you have taken any loan and you got a job, and the repayment starts after you get the job, right, on the educational loan. So whatever interest you are paying on that educational loan, you can claim under this section, and there is no limit for that. And 80EE and EEB, there are certain conditions. So apart from that, claiming the interest, additional interest you can claim under this section. And 80EEB, this is a recent section actually to encourage the renewable energy sector. If at all you are purchasing any electric vehicle on a loan, if you are whatever interest you are paying on that electric vehicle loan, you can claim under this section up to 1,50,000. Okay, and 80TT and TTB is for the saving account interest. So everybody will be having the saving accounts, right? And if you are parking any amounts there, you will get a certain interest. So for senior citizens, it is up to 50,000 they can claim per year, and for other than senior citizen, they can claim up to TTA. So these are all the available deductions actually. So if at all any client comes, then we'll see. So whether he has any of these sections are applicable. Accordingly, we'll plan his tax structure so that he can save some tax. Okay. If you have any doubts on that, you can maybe type on that chart on the deductions. Okay. And the next slide is for the tax planning, how we do. So, I mean, if I tell you like, if you plan your taxes properly, up to 2 crore turnover, no need to pay any of the taxes. Can you believe it? And this is your slide actually. Say, for example, for any trader, if the turnover is up to say 2 crore, and there is a concept called presumptive taxation. What is presumptive taxation? So for everybody to maintain the books of accounts is very difficult. Okay, and income tax in Income Tax Act, they have given a provision. You can say that is called as a presumptive. It's a privilege actually. So what they are saying, if your turnover is in a bank, if you do the turnover in bank transactions instead of cash, and if you offer 6% as a profit on the turnover, that means they're allowing 95% as an expenditure. Okay, 6% profit if you offer, it is coming how much? 11,82,000, right? And if you have any house And if you are paying any interest on the housing loan, up to 2 lakhs, you can claim as a deductions. And the other deductions I have already told you in the previous slide. If you add all these things, the taxable income is coming to 4,97,000. That means below 5 lakhs. And below 5, if the income is below 5 lakhs, you can claim as a rebate. Up to 12,500, you can claim as a rebate. Okay, if you claim that rebate also, then no need to pay single rupee as a tax, even though if your turnover is less than 2 crore. Yeah, so Kodali is asking, sir, is it applicable SIP investment under ATC? No, SIP investment, it is not applicable actually. That is only your saving. What is business income? Okay. Vaibhav is asking what is business income. So there are 5 types of head in the Income Tax Act. Income from salary, income from house property, profit or loss from business or profession, capital gains, and income from other sources. So if at all anybody is doing the business or the profession, that income is coming under that business income. Hope I am clear on that. Okay.
Yes, yes.
Yeah, we'll go to next slide. Tax planning tips for the startups actually. So to encourage the startups, so existing companies, the tax rate is 30%. Okay. And for the startups to encourage, they have introduced 2 sections, 115BAA, 115BAB. So on the profit, instead of paying the 30% tax, you can opt for the section subject to some terms and conditions, and you can pay only 22% for any business or profession and 15% for the manufacturing companies. So what is manufacturing companies? They have given the definition, and also if it is registered on or after 1st October 2019, subject to those conditions, you can opt for the lower taxation rate instead of 30%. Okay. And also maybe you can ask me, so in the tax deductions, we are telling only about the individuals, right? How it is beneficial for the companies or partnership firms or LLPs. Okay. So in that angle also, the partner or the director can claim some of the expenditure from his company, like his salary and all that, right? If you are claiming any expenditure from the company, and he can use those deductions to claim to save the taxes. Okay. And the second point is NPS, National Pension Scheme. So this already I told you in the previous deductions, right? So straight away you can save 30% tax if you are into 30% tax, but if you are opting for the NPS. Okay. And third is gifts. So any gifts received from relatives or others up to 50,000, it is exempt. And of course, they have to report in their income tax returns. And gifts received by any person on the occasion of marriage in the hands of recipient, it is exempt. If you see in the high net worth individuals, high profiles, so there will be more of the gifts received on the occasion of marriage because of this section only. Okay. And the next is long-term capital gain. So in the capital gain, there are 2 things, like one is short-term capital gain and another is long-term capital gain. What is the difference between short-term capital gain and long-term capital gain? For the shares, if you are holding more than 1 year, then it will call it as long-term capital gain. But if you are holding less than 1 year, it is a short-term capital gain. Apart from that, securities, if you are holding any property, if you are holding more than 2 years, it is long-term capital gain. If you are holding less than 2 years, it is short-term capital gain. Okay. And sale of shares up to 1 lakh. 1 lakh means the capital gain. See, I mean, most of the cases what I have observed in some of the our clients also, they will hold the securities up to like 364th day or 363 day, and they will sell it. They will sell it. If you're holding for some 2-3 more days, then the tax rates are different. The long-term capital gain, the tax rate is 10%, and the short-term capital gain, it is 15%. And also in the long-term capital gain, up to 1 lakh capital gain, it is exempt. There's no tax. Okay, so if you are holding for like that 2-3 days, instead of selling at 363 day or 364 day, then they can claim these exemptions. So this is how practically it works. Okay, and if it is for the sale of property, if it is a sale of property, the capital gain, whatever that capital gain is there, if you are purchasing any new residential property, you can claim full amount as an exemption. Yeah. Maybe you can go to next slide, sir. Yeah, there is a beautiful section on HUF. Okay, this is a very less explored section by either CS or the clients. Okay, HUF means Hindu undivided family. Okay, the benefit of HUF is, say, let's take a practical example. Okay, one person is having either business or salary income, say more than 10 lakhs. Okay. And also he has some ancestral property wherein he is getting the rental income from that ancestral property more than 10 lakhs. Okay. If we add this 10 lakhs and 10 lakhs, total income is coming to 20 lakhs, right? And that if you calculate the tax is coming to 3,67,500. Okay. But by floating this HUF, they can save more taxes. How? Because for HUF also, there are the existing tax slab rates are applicable for HUF also, as per the Income Tax Act. Okay. And if you route this rental income to the HUF, because it is an ancestral property, so there will be separate tax slab rate. In the case 2, if you see, the tax is coming only 1,65,000 instead of 3,67,500. So thereby he can save up to 2,02,500 just by floating this HUF as per the Act. So this is how tax planning works. If you have any doubts till now, you can type in the chat box. Okay, we'll move to next topic. Yeah. Have you ever wondered how our information is going to Income Tax Department? Through these SFT transactions. What is SFT? Specified financial transactions. What are those? I'll take one example. Say if you have any saving account, and if you are depositing the cash, physical cash in your saving bank account more than 10 lakhs, it will be automatically reported by your bank to the Income Tax Department. Okay, like that, if you are doing any business and if you are having any current account, if you are depositing more than 50 lakhs physical cash in your current account, your bank will directly report that information to the Income Tax Department. Okay, likewise, if you are purchasing or selling any immovable property, and if the immovable property worth more than 30 lakhs, sub-registrar who has done your registration work, he will automatically report this information to your Income Tax Department. Okay, why we are telling all these? So whenever we are filing the income tax return for any person, we'll take care of all this information. So whether if at all any sale of immovable property is there for any person, if he is not reporting in the income tax, the chances of getting in notices are very high. And thanks to technology, with a click of button, we are getting the notices. So we'll check all this information from the income tax portal, whatever is reported there. Accordingly, we'll prepare his income tax return, we'll file it. This is only a guidance factor. I'm not saying this is only 100% we have to check that. This is only guiding factor. If your income tax return is conformity with all these transactions, then it is good to go. Okay. Yeah, how this information will be captured? So like this, it will be captured actually. Okay, if you are making any payment of credit card, if it is more than 2 lakhs, it will be reflected like this. And if there are any term deposit, fixed deposit you have taken, then it will be reflected like this. And purchase of sale of movable property, it will be reflected like this. Maybe if time permits, I will show in the income tax portal how it will work. Okay. Yeah. Next is on the I will go to GST. So hope everybody knows what is GST and how it will work and all, right? Theoretically. So there are certain sections which are very helpful for the business owners. See, there's a section called composition scheme. Okay. What is composition scheme? If at all any person is there who is into trading, okay, if the turnover is up to 1.5 crore, he can opt for this section, and under this section, instead of paying 5%, 12%, 18%, or 28%, he can pay up to only 1%. And this is applicable mostly for the trading activity and also if they are into B2C business. And for some states, actually, Meghalaya, Mizoram, Manipur, Arunachal Pradesh and all, the limit is only up to 75 lakhs, not 1.5 crore. And in the next slide, you can see what are the tax rates for the business. Yeah, for the traders, actually, it is 1%, CGST 0.5%, SGST 0.5%. What is CGST? Central Goods and Service Tax. SGST means State Goods and Service Tax. And for the restaurants and all that, it is 5%, 2.5% CGST and SGST 2.5%. And there are some conditions wherein they can't opt for this composition tax. Maybe you can go through it. It's very simple to understand. Yeah, so Vaibhav is asking for petrol, it is 12%. It is not 12% actually. First of all, petrol is not under GST. It is out of GST. So still it is under VAT. And for petrol, central government is levying some taxes and state government is levying more taxes, and it is not 12%, it is more than that. And it is not under GST. So your electricity bills, petrol, alcohol, so all these things are not under GST. It is out of GST.
If the petrol comes under GST, it will be cheaper than the water bottle. Am I correct, sir?
Yes, sir,
That's the
100%.
reason.
That is
So
the
that's
reason.
the
Yeah.
reason.
Yes.
Okay.
Because there is a limit actually. GST can't charge more than 28%.
Yeah.
Yeah, the rates.
Yes. So now the question and answer something like?
Yes, sir. Yes, yes. Maybe if at all I missed any questions, I will take now. Vaibhav is asking saving account, we can deposit, that will not be no problem because individual ITR we can file, but in salary you can't deposit, that will be used for only salary. No, it's not about, we are not saying not to deposit any amount. Your income tax return should support whatever information you are giving, right? Say if the salary income is, say for example, up to 3 lakhs, if he is depositing more than 50 lakhs in your saving account, then there's a problem, right? So automatically the chances of getting in notices from income tax departments are very high. So you have to ensure that your income tax return in conformity with your transaction in the particular financial year. And Swati is asking small scale business. So I don't understand what is that question.
Small scale industry they may be asking. So medium scale or a small scale. Small scale is how much is a investment, sir? I think.
In the business, in the companies, they are asking, I don't know.
Yeah,
Maybe,
companies only. Because small scale means say it is companies only.
okay. No, the question what she's asking, I'm not able to understand.
Yeah.
Hmm.
She
And
may be
Kodak,
asking what is a small scale industry or something. I think so.
okay. Sir, IGST related to other states, CGST and SGST related to the local state. Yes, correct. 100%. CGST is also central government. State government is, SGST, and IGST is interstate actually. If you are selling any products or giving services from one state to another state, we'll charge IGST, integrated GST. Yeah, so capital gain on the property sale. Okay. So if you are I explained to you, know, so in the capital gain, there are two things. One is long-term capital gain and another is short-term capital gain. So long-term capital gain for the property means what? If you are holding any property for more than 2 years, we call it as a long-term capital gain. If it is less than 2 years, it's a short-term capital gain. Okay. If it is more than 2 years, if you are selling any property, the tax rate is only 20% for the sale of property. And if it is a short-term capital gain, it is 30%. For the long-term capital gain, there is another benefit. What is that benefit? So if you are selling any residential property and subject to some terms and conditions, if you are investing that capital gain in purchasing another residential property, so you can take that total amount as an exemption. So no need to pay any tax on that. And that we can take in the once in a lifetime opportunity. That is actually subject to some terms and conditions. Hope I'm clear on that capital gain and property sale, Kodali.
Sir, Swati asked you about the composition tax is applicable, composition tax applicability for small scale industry.
Oh,
Whether
okay,
it is a, that's all. So whether it is a small scale or a,
correct. So small scale means, so for any business, if the turnover is up to 1.5 crore for the trading activity and up to 50 lakhs, if you are in a service business, then you can opt for this composition scheme under GST. And instead of paying either 12%, 15%, 18% or 28%, you can straight away pay only 1% GST under composition tax. And for services, it is 6%, subject to some terms and conditions. So what are those conditions? So you can't collect that 1% GST from your customers. You have to pay from your pockets. And there's a concept called ITC. What is ITC? Input tax credit. What is that? So for any sales, you will purchase something from your vendors, right? And for your vendors, you will pay some tax. And that we can call it as an input tax credit. So if you are opting for the composition scheme, you can't claim this ITC. Yeah. So flex printing business low yearly 50 lakhs income, GST bill, how much paid, sir? So flex printing, there are two things. Printing will come under as a job contract. So that means it will come under services. If it is a services, then up to 50 lakhs, you can opt for this composition scheme, and you can pay 6% as tax. For what purpose we put or prepare IGST? So IGST is nothing but if you are purchasing or selling any product or services from one state to another state, instead of charging SGST or CGST, we'll charge IGST, integrated goods and services tax.
Yes. Hope you covered almost all the queries. So that's yes, sir.
So that's what. So everybody knows what is theoretically how that act works and all that, right? So if you don't have that practical knowledge, it is very difficult for you to convince prepare your tax planning and all that. Unless you apply your knowledge practically, then only it is useful, right? Yeah. Under composition scheme, different kind of business can use or should be the similar ones. Different kinds of business you can use, but it should not be, if you are into trading, you can opt for the trading activity, products. And if you are in a business, service industry, you can club all the services industry and you can claim up to 50 lakhs in the service industry, up to 1.5 crore under trading, we are into dealing with the products.
Yes, sir.
Yeah.
Hope all the students you have got the, whatever he mentioned about the what is the tax planning, how the tax planning is done. It is basically tax planning is to take advantages of the act, whatever the exemptions are given. It is a legally available, the exemptions, like a tax evasion. They call it, it is a illegal. Tax planning is a legal. So that is what, and it's a very good subject. And you have also gone through he gave you that what are the tax 80D, 80C, 80DD, 80E, all these things, which these are all the normal, the exemptions, what we get it. So with that, if you have any, sir, I think that will be, if you have any query in a 1-2 minutes, you can just interact. We close the session. So that's the reason. If you have just, yes, sir. Anything for, I think already clarified their doubts. If they still have, because our speaker is very curious to solve or address the queries. Okay, that's the reason. Any more చెప్పండి మీకేమైనా డౌట్స్ ఉన్నా కూడా they have been attending this sort of for GST, income tax పైన కానీ వీటిపైన they have been big because we make it as this regular seminars for them. That's all under
Okay.
GST, income tax, and if we talk about the payroll, all this thing. So that's it. And so nice that you gave us them, like a old tax regime, all the, because what we say that they have to have a constant meetings, we will make them understand and then keep them updated. Okay. So thank you all the participants, and please give him a big hand. Open up over all the mics. Open
Thank you
all
so
the
much,
mics, and then thank him for having come and
Thank you, sir. Thank you. Thank you, sir.
Thank you, sir. Thank you very much, sir.
Thank you, sir.
Thank you, sir.
Thank you very much, sir.
Thank you.
Thanks, Andy. Thanks, Andy.
Thank you very much,
Sir,
sir.
one
Thank you
minute.
very much.
I wanted to close before the time. So that's the reason I closed
Yes.
before the time, and I have opened some window for the question and answers.
Yes, sir. Yes. Thanks a lot, Andy. Nice one.
Sir, 1 minute.
Yeah.
I have one question.
Anirudh,
Can I
right?
ask? Yes, sir. Sir, like how you told IGST, why we prepare like IGST we prepare in SGST and CGST also we prepare same, sir.
Anirudh, I want to stop you because the thing is that you are my student. I know you have not come to that subject of GST. once you complete your this thing, so you will understand that. Okay, that's the reason,
Yeah.
because these are all
Yes, sir.
IGGSTs, and filing of the forms, everything comes there. Okay, so
Okay, sir.
don't worry. We in that we'll take care of it.
Maybe we'll
Okay.
plan another section to run through the income tax side and GST side, how it will
Yeah.
work, sir. So
Yes,
that they will
yes,
have better understanding.
they will
And
have
they will-
better. Yes, sir. Thank you, sir.
Okay, sir.
Good day.
Thank
All
you.
right.
Thank you.